Hello, how to find support and resistance level swing trading chart analysis. So we are going to use few stocks from our watch list to try to find those levels. So the first one we are going to analyze is MCK. Using Thinkorswim platform, we are going to use maximum daily chart for our chart analysis. And we use long option long swing trading strategy, at least for 2025. And for that, we determine the support lines that we like to buy the stock at. So to trace your support lines, I like to start with maximum monthly chart so that I can see a big picture of the overall trend of the chart. And from there, you're just trying to trace your support line passing by the obvious lows of the chart. And you can use your drawing tools and use your trend lines. Once you start using it, you'll find it at the bottom of the screen when you are using Thinkorswim platform. And you're just trying to connect the first two closest lows that you can see. If that will allow you to touch point with multiple lines going forward. Otherwise, from those 2 points, you can just try to touch the y-axis, which is the price, and the s-axis is the date. So we connect those two obvious lows there, and it took us there. It touched base with few here as well, but then we can trace some more. And if I try to touch base with this low here, it will touch the third one as well, but then it'll go through the chart, and we don't really want to go through the chart if we can help it. So therefore, I'm just going to leave that one alone and try this one. And again, it's going to go through the chart. It could well be because that chart, this side of the chart went below this line. But again, we are going to leave that one alone and see if we can find. And as you can see, this one is still going to go through this level. So it could well just be that level is not quite unusual one. It went below those support lines that we are trying to trace. You can trace them, that will be fine as well. It's all about trying to connect the obvious lows that you are seeing, and then we can try from here. And when we try from there, it will pretty much connecting that low and this low, it will pretty much blend into this one. So we are not going to do that. And I can just trace this one, and by doing this, what I'm paying attention to is that low, this one, and this one. And by doing that, it went through this area, and I'm fine with it. And we can try to trace through there. It's just going to be kind of close to this one, therefore it's not necessary. So pretty much what you are trying to do is trace the line connecting at least two closest points that are the obvious lows of the chart, going from the chart to the y-axis. And then you'll continue doing that, trying to see if you can get close to where the price is right now. So you might end up having multiple lines. Now that you have multiple lines, you can see which one the price touch base with often. I'm going to extend this line a little bit. I will activate it and extend it. Go somewhere there. So as you can see, this bottom one, there is multiple touch point with it. This one, there is multiple touch point with it as well. So therefore, and those two, we have multiple touch point as well. So when you are looking at those with our long option long swing trading strategy, we want to buy the stocks at the support line, at the valley line, or the support line passing by the valley of the mountain, and sell it at the new high or after the new high is reached. Because we are trading large cap stocks, they are growth stocks. Upward large cap stocks, they are growth stocks, and they do reach new high, all-time new highs. So by looking at those, you try to determine the line that you are comfortable buying it at, that you think the price could fall back to rest before climbing another mountain. And by looking at the way this chart is, we can see that there is a sharp growth here, and I don't know if at some point it will try to pull back down. So and it has been on that growth for some years. Those dotted line are years. So we have 1, 2, 3, 4, 5, 6 years or so, without counting 2025. So what I will do is, this line, for instance, I will change the color of it as well to be an obvious line that I feel like it could well decide to come back to, if those two are too steep of a line to be a valley line. They could well just be a support line for the upside wall of the mountain, because the mountain will have the upside wall and the downside wall supporting each side of the mountain. So we will highlight this as well, but we might just assume maybe those two are less likely to be another touch point for the price, that they might be too low for it to come all the way down, but there is a possibility. So now that you determine those obvious lows, you will go to your maximum daily chart. A maximum daily chart is where you will do your chart analysis, is where you will purchase the stock, is where you will sell the stock, like doing the analysis to buy and to sell the stocks on the daily chart. And I like to use maximum daily chart in the sense that it allows me to have a big picture of the chart in front of on the screen to see the overall pattern that the price is drawing. So we have those lines that we color code that we like to buy. So your chart analysis will be to compare where the price is to where you want to buy. So if we assume this line, it could well be the valley line, or this one, then we want it to wait until the price fall back to that line and start going up from there before we buy. We try to do that. We bought it on this trend line. We bought it when it touched base with it and start going up from there. After a few higher lows, we made the purchase. That's why we put the arrow facing up. But then we sold it after it reached a new high there and got out of it, because we noticed that we could well have purchased it on the upside wall of the mountain, and at any point it could well just be done going up and decided to go down. So for that reason, we just got out of the trade after accumulating just a small profit. But that is how we determine the valley line. With our long option and swing trading strategy, we do not really worry about the resistance line. And the resistance line could well be the new high, for instance. But I just don't trace them anymore. And the only time that you might want it to trace it will be if you are trying to see where you want to get out of the trade, like your exit point. And I like to say the new high. So new high is a resistance. is the peak of the mountain. So for instance, if this price fall back, we can see that it touched base with this support line and went back up. So when it start going up, we will say at this level it reached a new high there. So and then that will be a resistance line. This will be the previous high before it pulled back, but then it exceeded somewhere here and pulled back, and then start going up as well. So you'll have your resistance line will be like the top of the mountain. But when it comes to our strategy, we focus more on tracing the support line where we want to buy. So to sell the stocks that we purchase, let's try this one. For instance, today is October 15, 2025, and the price, when we are doing the analysis after the market closed yesterday, but before it opened today. So yesterday, Tuesday, the price went up. That's why the price is highlighted in green. The evening price was higher than the morning price, so the bar is green and the price is highlighted in green, and it reached a new high as well, all-time high yesterday. So it's still going up. It touched base with this line again and then went up. So it's still on the, after touching base with this like a year ago, it's still going up. That's why I feel like this could well be the new valley line, but it could well decide to come down to this one as well. So I'm just waiting for it to come at least to this before I buy it again when it start going up from there, unless it decided to come down to this one that we just color code. So the next one we are going to analyze is MKL. So MKL, we can start with maximum monthly chart. You can see the support lines that we trace, and we color code both because we assume this could be a steep one that at some point it might decide to touch base with this one. So we have multiple touch point on this one in the past, and we have multiple touch point on this one in the present, like in the near present. So like for the last few years. So we select those two to work with. Now when we go to maximum daily chart, we have our lines, and on the maximum daily chart you might even try to trace some other support lines as well. Again, trying to get close to where the price is right now. And if I touch the first two, if I try to touch this one, it will take me right to where the price is right now. But then this area will be underneath it. So we can do that, and then we can try to trace connecting those 2 points to the original and trying to see. So this will think that will be a good one, not to go too much across it. So if this is a support line, it means that the price went below it, which is normal. Some of them, sometimes the price, like those lines that we color code, sometimes the price will fall below it before start going up. So it could well be that it doesn't really want to rest on this line. After those two touch point is selected lower one to rest on before going up. And that's why this, for instance, I will remove it just because in the last few years it didn't use it as a support line, it crossed it. So therefore I'll keep this one and I'll keep this one, but the other one we can delete it. So but again, this could just be an upside wall of the mountain. This is longer. This is like a year or 2 years uptrend line or support line, but this is longer and this is longer, so I will keep those two. This is longer than this one, but I will keep those two to be where I will want to buy it. Next time it touch base with either one of those and start going up from there. And you'll notice that we try to trace some resistant lines there, but we didn't continue doing it. But it was more so in 2024 when we are probably trading shorts up to launching trading strategy, using that strategy, or probably this year. But yeah, sometimes you can trace your resistance line passing by the peak of the mountain to see when the stocks is pulling back to start going up, if it's trying to rest at the resistance line of a previous peak. And it could well be the case as well. For instance, for those touch points that went back up, you'll notice that it coincides with this resistance line. So in those instances, you're trying to see if this support line is a support line that is going to remain on and start going up, just in case it's coinciding with a previous resistance line. But I just find that with the strategy that I'm using, less and less I'm relying on a previous resistance line as a support line to make a buying decision. I just trace my support line passing by the lows of the mountain, and yes, those support line could match a previous resistance line. For instance, this resistance line, if you trace it all the way, it could well touch base with this support line at some point. But I don't use that as a decision making that the price will touch base with that intersection for me to buy a stock, if that makes sense. I don't use that intersection as a buying point. I just rely on the support line, and after it touch base with the support line and start going up, I just try to see, is it making higher lows? Because when it start making higher lows, that means it changed trajectory. It's now going down, making lower lows, so it start making higher lows. So after I see 2 or 3 higher lows, I will purchase after the first or second green bar that follow a pullback. But I still need to work on that strategy to fine tune it, so it's not like learn and be done with, but I keep fine tuning the strategy, keep improving my trading strategy, my skills. So but for now, the rule that I like to go with is, if it touch base with the support line and start going up from there, after I notice 2 or 3 higher lows, I will just buy some. Just a confirmation that it's done going up, it's done going down, it's getting ready to start going up. But a lot of times it will turn around and go back down again for a while before it will be ready to start going up. That's why I like to compare what I'm buying to the previous time it touched base with that line, to see if it stay around that line for a while before it was ready to start going up. So those are things you have to consider. But again, support lines for this strategy, support lines are critical for us in our buying decision, to make our buying decision, because we buy at those support lines and we sell at after the new high is reached, not right away necessarily, especially if it's going to continue going up. So those are decisions we have to make by comparing the previous new high, which is this one. For instance, if you purchase it around the support line and it reach when it reached the new high here, it just reached a few times and then it pulled back again to it and then start going up from there. So when it reach a new high and pull back down right away, then you might decide that when it reach a new high, you are going to sell. But then the way this is behaving, it pull back close to it, but then start working on the upside wall of the mountain. So it's not that it came necessarily to this support line to to start it all over again, but because the support line supporting the upside wall of the mountain originated close to the valley line here, so therefore when it came down to start working on this support line, it was close, but then it continued going up, leaning on it, going up and so forth, and it's not done going up yet. So knowing that, and this, it has been over 2 years that it has been going up. So knowing that when you reach the next new high after you purchase it at the valley line, you can decide to stay in the trade for half that time frame, assuming it's going to repeat the same pattern, and then that will be your time-based strategy to exit the trade. And the third strategy will be to use the price to quantify where you want to exit. And let's determine that third strategy by using the third stocks that we are going to analyze, which is MLM. We highlight it because we purchased it and we have not sold it yet. It's in our portfolio, so we don't want to purchase a stock that we purchased already and have not sold yet, unless we intentionally wanted to do that. We don't want to purchase it by mistake. Okay, so MLM, again, if we go to maximum monthly chart, we trace that line that we want to together with you. We can try to trace some more. If I try to go this way, it's going to go right above those. We don't want that. Therefore, if we decided to go from where we want, we might just have to skip some. We might just have to skip those touch point and touch base with those two here. And here is a support line, but I just feel like it's less likely to come all the way down here because it didn't touch base with any valley line in the present, in the last few years. So this is more likely to be a touch point, and so this is less likely, but this is more likely. So if we want, we could color code it as well, but I think this is okay for us to rely on. So we go back to maximum daily chart, and we have this support line that, as you can see, it went below it here to touch base. Pretty much it is like the upside wall of the mountain, but then when it was done going up, it pulled back to this support line. So when it pulled back to this support line, we just purchase it. But here is the thing: we purchased it before because we traded it in 2024 using short upturn and swing trading strategy. You see the arrows facing up showing where we bought, the arrows at the top facing down shows where we sold. So we purchased it here, it pulled back on us, we remain in the trade negative until it went back up, reached a new high, we sold it at a profit. But then we purchased it again and it was done. So when it was done, it pulled back, we remain in the trade. So since November 2024 all the way to the support line, when it reached the support line again and about to start going up, we purchased it again. We didn't wait for 2 or 3 higher lows there before we purchased it. We purchased it again, but guess what? It was not done. It went up a little bit, it pulled back again to it. Let's see, we purchased it in March. it stayed pretty much, it touched base with it for a month later. So we were a little bit positive in this one, because you can see the price when I'm putting my mouse on it, and then it pulled back. So we'll be a little bit negative when it touched base with the trend line a month later there, and then it start going up from there. So when it start going up from there, you can see that, you know, we became positive from somewhere here, but then from somewhere there, but then it reached a new high at that point. So that is where the resistance line will come in place again, and I put those line there. They are resistant line, but I didn't trace it all the way for this one. I could, but it's just a mark. I'm using it like a mark to determine where the last high was before it pulled back to the support line, and where the first new high in this trip, in this trajectory, where the first new high was as well. It makes it easier for me than trying to put my mouse to see the peak. So when it reached here, it was the all-time high again. That's where it started it. So when it pretty much around this area, I became positive in this one. So it reached a new high here. So that was our first strategy. It reached a new high. I could sell it, and I'll have good profit on this purchase, a small profit on this one because I purchased it quite high. But then I tried to see, since it left this support line and reached a new high, is it going to continue the claiming the mountain? For that, I will have to rely on what happened previously. So that's why I have this resistant line there as a mark point. So when it touch base with this support line, and that'll be well in 2023, and start making a new high, the first one was somewhere around here, around there. So from that point, the first things we will, let's just say the term base exit point. So it was around June 2023 all the way to November 2024. So almost 1 year and a half. So we can say 1 year, 5 months or so that it has been on the rise. So therefore, if it's going to repeat the same principle, the same pattern, by having this mark here to tell me that that's the first a new high in this rise, that was in September. So it was just easy for me to locate it. That was in September. Therefore, it's just the price that was higher, the highest point, you know, so far. When it left here, the highest point is higher than those, because I'm using maximum daily chart is all-time highest point. The first time it reached it, leaving the support line, it was in September. So September, then you can estimate 1 year, 5 months or so. And then you can say to yourself that maybe it may not exactly replicate the previous pattern. Therefore, maybe 1 year, you will stay in the trade for 1 year before you sell it. So you can estimate that maybe the next September or so, like 2026, will be where you will sell it, if that makes sense. So that is in that sense that I'm using my resistance line here. I just like a mark for me to quickly know where those new high points are. The last one, the first one, the last one in this pattern, this position, not really position, but like the mountain, from the support line to the mountain to the support line. So that mountain design pattern, that was the last peak. From this one that is getting created, this is the first peak, just to have those landmark to reference. And we have our arrows to specify where we purchase our stocks. So that is the second strategy. That is, just for me to reference that I put those resistant line there. Now the third strategy that I'm using recently to support my second strategy is the price. So I'm going to calculate a ratio by using the highest point here divided by the price at the support line during this part of the pattern here, the chart. So the highest price here was 631. We can use a calculator. 631, and the lowest point is 319. So divided by, we can just round it to 320 because it was 319.7. So we can round it to 320. It's giving us 1.97. So 1.9 ratio. So you bought it at 320, you sold it at 631. So almost double the price. So now the lowest touch point in this section of the pattern is like around the support line. The lowest point it went before reached that new high is 440. Let's just say 442. Now 441, because we want the lowest, so we are going to round that one down. 441 times 1.9 is 837.9. We can just say 837. So our third strategy will be to use a ratio and say that, well, we will sell it when it reaches 837 or after 1 year being on the rise. Maybe whichever comes first, I'm not sure yet, because I had to test a few times to see which one works for me. But before, I just used to say when it reach that new high, I will sell it, and I have done that a few times. But now I like to push that boundary to see how long I can stay in the trade safely without overstaying in the trade until they start going down again. And there are some strategy that's one way you'll know when to get out is to stay in the trade until the position ended, and then the price start going down, and then you can get out. And some trader use the stops to get out, but I don't use stop loss because I don't sell it at a loss, and because I don't use stop loss, I don't adjust it. Those are strategy you can use. I just don't use it. I like to simplify my method and just keep analyzing those stocks on a regular basis so that I don't have to just automate the system for that to sell it for me. But as much as I analyze it to buy, I like to analyze it to sell so that I'm in charge of what I'm doing, not just but you can set the price like when it reach 837 to sell it for you. And we are using chart swap, and if you do that, you set the time frame, and I think the maximum will be maybe 90 days, and you can renew it again, like redo it again if you want, but I just prefer not to sell, not to place the order to sell it by, you know, having a longer time frame until you reach that price, but just keep analyzing it so that I know that I have to do with those stocks that I purchase that are doing well, performing well. I need to keep analyzing them until I decide when to sell it, but it's going to take me a while to fine-tune those skills. So again, when you are swing trading, you are new to it, it's not like you are going to master it, that therefore you need to master everything before you start swing trading, especially if you are thinking about swing trading. Don't feel like you need to know everything before you start. Just start small, one share at a time. You can see buying it at the support line around 453 and now it's 657. If that's just one share you purchase, you have a good amount of profits in that one share. And when we are using this example, 320 and 631 is almost double the price. So even if that's just one share you purchase, you'll be able to make a good amount of profit to be able to pay the brokerage fees and have some profit left for you. It's all about setting minimum profit target $1. And clearly with this strategy where you are buying it that low and sell it that high, you'll have more than $1 net profit after you pay your brokerage fee. But it's just a way to test the stocks you are trading if you have now through the year, to see if the strategy you are using is working well with that stock. And once you have that confirmation, when you are going to buy that stock again, to increase that profit, you just need to buy more share. So to stretch your capital so that you can test multiple stocks on your watch list to see if they are good stocks that you pick for the strategy you are using, because you can have some stocks that are now well suited for the strategy you are using, but a lot of time is by trading them that you will have that confirmation. Not always, some of them will be obvious depending on the pattern, but some of them where you are entering the trade sometimes will teach you a lesson unless you actually make that purchase. I felt like so, but just by buying one share at a time, you're not going to commit the money of your from your account to any particular stock, or especially if it turns out not to be a good purchase, a good stock for the strategy you are using, or you didn't purchase it at the right price and you are waiting for that to go back up before you sell it, you are not going to have a lot of money committed in one stocks. Additionally, because we are buying it at this valley land to sell it well after a reach multiple peak, we might stay in that trade for a long period of time. That money will be committed for a long period of time, and you will need to keep investing in that account to keep having cash flow to trade with. Therefore, it might be a good idea you do not commit a large sum to one trade, so that you can keep practice. You can have enough cash flow to keep practicing the strategy you are using and keep testing the stocks you have in your watch list to keep improving your strategy, your trading skills as well. So, and that is how we determine our level, especially our support lines, and take note of our resistant lines, but not doing much with it in our decision making, especially when it comes to buy. But it comes into play when it's time to sell, or when you are deciding to sell. Those could be your reference point to see how far the price is on the rise, to see if it's safe for you to get out so that you can realize the accumulated profits, or if it's okay for you to keep remaining in the trade. So thank you so much for your time. We thank you very much for watching our videos, and we thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. For more of swing trading tips, will you please check the playlist in the description of this video. And again, with our long swing trading strategy, we trade upward large cap stocks, and therefore the strategy I'm using, the support line that I'm tracing, is in relation to the strategy I'm using. I'm tracing upward. I'm tracing uptrend line, uptrend support line. I'm not tracing horizontal support line. I'm tracing uptrend support line. They are oblique, because again, I'm trading growth stock. They are growing, they are going up. I'm tracing support line that are following the same direction, and my strategy is based on that. It may not necessarily be the only way you trace support line. Support line could be horizontal as well, just like the way I put my line here. If you are combining resistance line to a support line, you could trace horizontal lines as well, but it will depend on the strategy you are using. I tend to trace uptrend lines, support lines, and make my buying decision targeting those support lines. Thank you for your time.